This month, global markets cooled, India held steady, and a few surprise data points made everyone sit up.
A supportive policy move, fresh forecasts, and signals that could shape the start of the new year.
This is the December market outlook. Hi everyone. Here's a quick look at how Indian markets moved over the last month. But let's start with the global developments first. Globally, markets cooled after an AI-driven sprint. The US tech, especially the Nasdaq, lost momentum as valuation and caution around the Fed stance slowed the rally. Europe shifted between weak data and talk of future cuts, while Asia stayed mixed. Japan remained upbeat, China signaled a modest 5% growth target, and global investors stayed cautious. Through this, India maintained steady footing. The Nifty and Sensex gained through most of the month on resilient earnings, softer inflation, and a stable macro backdrop. Domestic demand stayed strong, and IT and pharma added balance. Expectations of potential rate cuts, which eventually played out with a 25 bps cut by RBI, also lifted banks, real estate, and consumption names. More recently, though, sentiments have softened. Markets slipped ahead of the US Fed outcome, triggering some profit booking. FII selling added pressure across sectors. A few data points stood out though. A wider trade deficit driven by gold and silver imports, flat core sector growth, and volatile rupee. But exports held up. Unemployment stayed stable, and policymakers expressed confidence in the macro outlook. Moody's reaffirmed India's growth prospects through 2027. Farm output touched record highs, and RBI liquidity support kept sentiment firm. Domestic inflows continued acting as market stabilizers. Overall, while global markets hesitated, India stayed measured and largely in cruise mode. Thank you, and now let's move to the month's biggest policy development.
Hi everyone. I'll briefly update you on the RBI's MPC meet. The RBI's MPC delivered a 25 bps rate cut, bringing the repo rate to 5.25%. This is the first cut since June, taking total easing in the cycle to 125 bps. The tone stayed dovish. Further, to keep liquidity comfortable, the governor announced INR 1 trillion OMO purchases and USD 5 billion through a 3-year forex swap. On the macro front, RBI cuts its financial year 2026 inflation forecast by 60 bps to 2% and raised its GDP projection by 50 bps to 7.3%. But despite this, bond markets stayed range-bound with upward bias in yields. Market seems to suggest the rate cut cycle may be nearing its end. Further, even the swap markets aren't pricing in further easing over the next year. Looking ahead, February rate cut seems unlikely. The RBI is expected to wait for the new CPI and GDP series. Additionally, liquidity of around INR 1.5 trillion is still expected in Jan-Feb month. Overall, we see the 10-year G-Sec yield to hold in the 6.35 to 6.55% range in the near term. That's the monthly market outlook. Thanks for watching, and we will see you in the next update.